Hello guys, I know a lot of people, they get frustrated when they use a stop loss, and they are frustrated also to make a plan. They don't want to make a plan. Okay? For trading, if you are, for example, doing short-term trading for weeks or for months, 1 month or 2, 3, 4 months, a lot of people, they don't want to use the stop loss. Now, the problem is that if you are trading, not investing, if you are trading, you should make a plan. Either you are day trader or a swing trader or short-term trader. You should make a plan where to exit if things go wrong. This is the problem. When you are doing, for example, a short-term trade, if you leave the stock going down for long, you can lose a lot of money, and this is called in trading a big loss. Okay? You should never do big losses because big losses are for beginners. And if you, for example, just see your trading. Okay? Let's say you bought a stock. Let's say you don't put stop loss. Now, if this stock is against you and you leave it for a long time, you will be losing high percentage. 10%, 15%, 20%, 30%, and the stock is going down because it is going down for a downtrend, and there are maybe people are shorting the stock, maybe the company is doing bad, so the stock will be going down, and it is eating your money, your capital. I'm not speaking about eating your profits because the stock has not gone up. It has got, whenever you buy it, after a few days it's going down. So the stop loss is just to make you stop losing more money because you have loser. This is why we use a stop loss, is to stop the risk, not losing more money. Now, in which case you don't put stop loss, is that when you buy the company for many years. It means you are investing. In investing, you should dig into the company financials. The company that you choose to invest in, it should have good qualities. That's why you are going to buy this company. Shares, whatever are shares, 1,000, 10,000, whatever shares, it's up to you. But since you are not going to stay 1 day or 1 month or 2, you are staying many years, and you are confident that this company will be doing better in the future. In here, you don't use a stop loss, but understand that when you are going for a long time, understand that you can make money or you can lose money. So this is another risk that you should take in investing. It doesn't mean that when you buy a stock, you stay 2 years or 3 years, the stock will be going up. It doesn't mean that. So time doesn't give you the time. It doesn't give you the money. What gives you the money is the direction. If you buy a stock, even 1 month or 2 months or 3 months, it's going up, you will be making money. Okay? Not to stay 3 years or 5 years or 10 years in order to make money. You begin to make money just from the beginning. That's why here, if you are thinking about investing, you should do your homework and you should diversify. Don't put the same sector, many stocks, because if this industry go down, you will lose a lot of all these stocks. That's why you try to diversify. For example, if you buy a company that you think is good in oil company, for example, you can go internet company, you find another one. You can go and find, for example, banks. You can find drugs. It means you try to diversify and leave this portfolio for many years. After many years, after 1 year, 2 years, 3 years, you will see your investment. Are you making money? Yes or no? Without putting stop loss, without exiting, because you have done your homework. And this is the only difference between putting stop loss, yes or no. Okay? So always don't confuse yourself. If you are doing day trading or you are doing short-term trading, you should put stop loss, because if you don't put it and it's against you, because you become weak. Psychologically, you become weak. When you see that the stock is going down, although you see that you begin to lose a lot of money, but you stay. Now, why you stay? You stay because you hope that the stock will come back. And this hope is a feeling. It's not true, because you see the stock is going down week after week after week after week. And I know that most of the people who lose money, they lose it this way, is to leave a loser, take more money of your capital. So if you want to become a trader, you should change your mindset and make a plan. Even if you don't put stop loss, you should know where to exit if things go wrong. You should put that. Why I don't say to you, you should put a target for profits? No. You should never put a target for your profits, because the stock can go in many days, many weeks, or many months. It can go so good. So don't stop when the market is good for you and the stocks are doing good. But if you just buy the stock after a few days, the stocks are going down, in this case, you should think before you buy the stock to put a plan. You should plan these things. That's why you become disciplined, and that's why you will be making money in the future, if you are disciplined. Now, if you just buy a stock, it goes down, it eats 50% of your money, you put 5,000, 10,000, 20,000, 100,000, and you become waiting 6 months, 1 year, 2 years, okay, all your money is gone. And I am so sorry to see some people sending me emails, and they say, oh, what can I do? I have $135,000. Now I only have 20,000 because I lost. It shouldn't be like this. So in order to redress your situation, you should change your mindset. Change the way you do business. Change how to search for stocks. Change your plans. Okay? And when you change, things will change for you for the best, I guess. Okay? So thank you very much for watching. If you have any questions, please ask. Thank you very much.